For this Pac-Man wizard, there probably won't be a twist. Hello and welcome to the Deal Report. I'm Jeff Kanige. Men's Wearhouse yesterday turned the tables on its would-be suitor, offering to buy Joseph A. Bank for more than $1.5 billion in cash. Earlier this month, Joseph A. Bank walked away from its own $2.3 billion bid for Men's Wearhouse, after the target, now bidder, refused to negotiate. This move by Men's Wearhouse is a variation on what became known as the Pac-Man defense, after what was once a popular video game. The strategy was pioneered in 1982 by Thomas Pownall, then the CEO of Martin Marietta. Rather than surrender to a hostile takeover bid from Bendix, Pownall turned around and launched his own offer for the much larger attacker. Pownall's action eventually forced Bendix to look for a white knight, a role filled by Allied Corporation, which ended up acquiring Bendix. Martin Marietta survived the month-long battle, though it ended up with a mountain of debt. But Pownall's bet on aerospace paid off, and the company thrived, eventually morphing into Lockheed Martin, one of the country's premier defense contractors. Now, there are a few important differences between the Bendix maneuver and what Men's Wearhouse is doing. First, there's the size of the combatants. Martin Marietta was smaller than Bendix. Men's Wearhouse is larger than Joseph A. Bank. Martin Marietta had to borrow about $1 billion to go after Bendix and needed help from United Technologies. Men's Wearhouse says it can finance its deal by itself, partly with cash on hand. And Joseph A. Bank has already abandoned its bid. Bendix had acquired a significant stake in Martin Marietta when its prey fought back. The most important difference, though, may be the presence of an activist investor pushing for the combination. Hedge fund Eminence Capital holds nearly 10% of Men's Wearhouse and was unhappy when the company rejected the bid from Joseph A. Bank. The fund also holds about 5% of Joseph A. Bank. So what happens now? Well, the Pac-Man defense has been rare in recent years, but when it was popular, it usually ended with the companies involved reaching some kind of agreement. After all, the twin bids demonstrate that management, directors, and shareholders all believed that the company should become one. As if to prove that point, shares of both Men's Wearhouse and Joseph A. Bank rose sharply after the Pac-Man bid was announced. So despite some contentious bluster from both sides, we know how this game is going to end. In New York, this is Jeff Kanige for The Deal.